In the last 3 years, this company's stock has lost over 75% of its value. Investors are in a world of pain. Will there be an opportunity to make hundreds of percent upside if the company recovers? Or is this company destined to get wiped out? Hi, this is Daniel with Unrivaled Investing, your guide to finding exceptional companies and unrivaled investments. Despegar is the company that we're going to talk about today. The ticker is DESP. It's the second company in our multi-bagger series. What's a multi-bagger? A multi-bagger is a stock that could potentially go up hundreds or even thousands of percent in the future. Last week we talked about Livongo, which is already up over 200% this year. Despegar is on quite a different journey. In full disclosure, at the time of this filming, this is a company that I own shares in, and clients of Unrivaled Capital also own shares in. Despegar is the #1 online travel agency in Latin America. They get hundreds of millions of visits to their website each year as people in Central and South America explore and experience leisure travel. Back in 2017, Despegar was riding a few secular tailwinds that were driving increased demand. These included: Number 1, increased discretionary spending. Latin America was forecasted to add over 100 million people to their middle class over the next decade. As societies get wealthier, people like to spend more of their discretionary purchasing income on traveling. Number 2, increasing online penetration. Online travel booking is generally more cost-effective and has better options than offline travel booking. And yet, it's only about 40% of the Latin America travel market. Online travel is expected to grow to well over 50% of the Latin American travel market in the decade ahead. Despegar has many attributes that make me think it either has a strong or an unrivaled value proposition. And that's the name for this channel, Unrivaled Investing. We're looking for companies that have that UVP, unrivaled value proposition, because at the end of the day, if your company is unrivaled, it means you offer something, either a quality or a service or a price that's better than you can get elsewhere. Let's dig in a little. Despegar has several attributes that give them a strong value proposition and strong competitive position. The first is a network effect that creates a barrier to entry for new competitors. As the #1 online travel agency, there's a self-fulfilling network effect. Their large customer base attracts additional travel suppliers. These suppliers are hotel owners, airlines, rental car companies, insurance providers, you get it. And the larger network of travel suppliers, think greater selection in hotel rooms, helps you attract more customers. It's a virtuous cycle. More customers mean more suppliers. More suppliers mean more customers. This creates a barrier to entry for new competitors to come into the market. It's harder for them to enter the field because they don't have the same supply that Despegar has. If you want to find an amazing room when you're on vacation, Despegar has more supply, so it's more likely you'll find what you want going to Despegar than going to some new startup. The second key attribute is a cost advantage with more direct traffic. With the #1 brand in Latin America, they have a cost advantage as customers increasingly go straight to their website to book their next adventure. This leads to repeat customers. In 2019, 64% of their business was from repeat travel customers, and nearly 40% was from their mobile app users. In contrast, Despegar's competitors would have to pay more money to Google for the relevant search results that would drive their site traffic. So this is a direct example of where a brand can result in a cost advantage for a company. The third attribute that I'm going to talk about is intangible assets, or where Despegar is delivering what the customer wants, and maybe they're not able to get it. The customers aren't able to get it from other competitors. So Despegar also has the best local offerings for their market. For example, Despegar partners with several local Latin American banks, where Despegar has enabled millions of travelers to pay by an installment plan, a either zero fee or zero interest rate installment plan. If you're able to offer an installment plan and your competitor doesn't, you have a stronger value proposition. So here's a slide from their March 2018 presentation, which reflects how they were able to initially grow to the #1 position by having a broader offering than all of their competitors. So Despegar has a strong value proposition, and you could see it each year as they gobbled up market share from their competitors. So Despegar has a winning value proposition, and it's in the right place, Latin America. But is it the right time? Well, as you'd expect, Despegar, like all travel companies, is getting crushed by the pandemic. During March 2020, gross bookings declined by over 95%. Now they face over $100 million in cash burn this year. They are doing everything they can to survive during this tough period. While Despegar has a strong value proposition, the stock dropped over 80% from its all-time high and lost over 40% in 2020 alone. But that's where we are today. We are in the thick of a pandemic. We need to ask ourselves, where are we going? Or as Wayne Gretzky once said, I skate to where the puck is going to be, not where it has been. So we're wondering, where does Despegar trade in 5 to 10 years from now? In one upside scenario, could Despegar be up 300, 400%? Maybe. Well, how? Let's imagine in 10 years Despegar could have $800 million in sales. This assumes the pandemic has been resolved and Despegar grows 50% above its prior peak. Let's imagine they learn how to scale their business to make it more profitable so that their operating margins are at least 20%. This doesn't seem unreasonable, as some online travel companies have operating margins above 35%. In this scenario, they could have $130 million in net earnings after taxes. Now what about valuation? Let's assume a market value of about 15 times earnings. This strikes me as a reasonable valuation, as it implies a cash yield of nearly 7%, or 1 divided by 15. And as long as Despegar has potentially decades of growth in front of it, which I think it does, 15 times earnings would seem cheap. So if you take 15 times and multiply by the hypothetical future earnings, that gets about $2 billion valuation. This excludes the several hundred million in cash on their balance sheet now and the potential cash they might burn or make in the future. Then lastly, based on 70 million shares outstanding, you'd get a stock price of around $28 per share, which is literally hundreds of percent higher than where it traded during most of June, which is around $7 to $8 a share. As a gut check, you can also see that Despegar used to trade in the 30s. This was back when investors were more bullish on their growth prospects. So assuming a $28 stock price sometime in the future, with a return to normalcy, doesn't seem that crazy. So what's the downside risk? You lose 100%. Or a lot. The reality is no one knows how long this pandemic will last, and the impact on the travel industry. While Despegar currently has several hundred million in cash on their balance sheet, they're currently cash burning, and that's clearly not sustainable. That said, if you think the pandemic will end much sooner than the consensus, and keep in mind, I have no special insights here, then loading up on Despegar stock could make a lot of sense. But not all stocks are like Despegar, that's getting crushed during the pandemic. In our last video of potential multi-baggers, we talked about Livongo, which is crushing it during the pandemic. Part of the reason I find Despegar interesting is because the upside-downside is asymmetric. Several 100% upside versus 100% downside. If you place enough bets where you can theoretically make 3 to 1 on better than 3 to 1 odds, you should win over time. Meanwhile, you increase your odds of success by investing in unrivaled companies. In the case of Despegar, they have several strong attributes. They're number one in its industry, taking market share, clean balance sheet, and inside ownership. If the travel industry survives, they should win over time. That said, given its elevated risk profile, the downside is very real, and you risk losing 100% if the pandemic lasts longer than people expect. With this type of downside, I won't make it a large position in my portfolio. But let's invert that logic. Does that mean that the companies that have the most upside should have the largest position in my portfolio? The short answer is no. It's not about the companies with the most upside, but those companies that you think have the best risk-reward, the least to lose, while also having acceptable upside. And this is an important lesson for portfolio and risk management. For me, the largest positions in my portfolio are those companies that I think have low risk of losing a lot and still have an attractive return, and not necessarily those that can go up the most. Famous investor Monish Pabrai wrote a great book called Dondo Investor, and I won't spoil the book, but one of its key concepts is that you should find companies that are situations where heads you win and tails you don't lose much. When you find a company like that, or a stock situation like that, bet heavy. I recommend his book, and you can click a link below to buy it if you'd like. So in today's video, we talked about Despegar, the #1 online travel agency in Latin America. They have a very strong value proposition, strong long-term growth trends, but face crippling near-term headwinds. In the decade ahead, it could easily be up several 100%, but it could also lose 100% as the pandemic is crushing the travel agencies. On the flip side, if you think a COVID cure might come sooner than expected, I would expect stocks like Despegar will rally very strongly. If you liked this video, please like, subscribe, or comment, or feel free to post any companies that you'd want me to look at in the future. Also, if you're enjoying learning about unrivaled companies or want to see about how I'm personally investing, go to unrivaledinvesting.com, click on Journey. Thank you for watching. At the time of this video publication, Daniel and clients of Unrivaled Capital own shares in both Despegar and Livongo.